Good morning, everybody. Today we've got Gareth from Interlife. He is a specialist mortgage broker, and I'm going to be asking him some questions about getting a mortgage in the UK and focusing on non-residents getting a mortgage in the UK. So, yeah, it's over to you, Gareth. If you can just introduce yourself to everybody.
All right, morning everyone. I trust you're all having a good day and weather's good wherever you are. I'm currently in South London and weather's not the greatest. So for of you where it is great, I wish I was there. So yes, I run a mortgage advice firm, specialist firm called Interlife. I'm originally from South Africa. I know Sale have a lot of South African clients, but they have a lot of international clients as well. But I've been in the UK for the last 20 odd years, and I've been in the property sector for the last 16, 17 years here in the UK. And our firm, Interlife, being a specialist mortgage advice firm, yes, we do the traditional, regular residential mortgages, but most of our clients have complex either income or nationality queries. So we deal a lot with foreign investors, both foreign clients that are now living in the UK and are buying either residential or investment properties, or we also deal with a lot of clients globally. So we've recently set up an office in Dubai, which is all being set up just to help grow our footprint in the Middle East. However, we've got clients from all over the world. So we've got clients in as far as the Philippines on the east. We've got clients in Canada on the west, and we help obtain mortgage finance for clients wherever they are in the world based on UK assets. So one of the questions we get asked a lot is, can we do with mortgages for clients for buying property outside of the UK? No, we only regulated on giving advice for clients buying properties within the UK. So yeah, so we deal with all different types of finance as well. So on properties, be it, as I say, residential. So residentials, if you're going to be living in a property, buy to lets, we do commercial, we do development, we do bridging finance. So whatever finance you're looking for buying a property, we're able to arrange the finance for you.
Awesome. Thanks, Gareth. And now the title of this webinar is obviously how to get a mortgage in the UK as a non-resident. How can you chat through how you're able to do this?
Yeah, so it is a specialist topic. Now, in the UK, unlike a lot of other countries where they might only have a handful of lenders and you have one type of mortgage that encompasses both residential and buy-to-let, in the UK, we've got over 100 odd lenders that we deal with. Now, a lot of those lenders might only focus on residential, some might just focus on buy-to-let. And every lender has different criteria. It's not a one-size-fits-all over here, unfortunately. So it's up to us to know the criteria of all these lenders. Now, I'm not going to lie to you, it is a little bit more complex. It is a little bit more trickier than if you were someone living in the UK that's got a 3-year address history, that's got a good deposit, that's got indefinite leave to remain. It is slightly trickier. However, it can be done, and there's certain caveats that they look at. It's also very important about the property. So the things that we look at, if you're, and we're talking here as if you're an investor buying an investment property in the UK. So the key criteria when you're looking at an investment property is what's the value of the property. Now, when we're buying with lenders, international clients, most lenders don't want you dealing with properties that are 50, 60, 70, 80 grand. A lot of lenders will have a minimum loan or a minimum property price, and quite a few start at the £150,000 mark. The reason they do that, it's obviously a cost to the lender to lend money, and when they're lending on complex cases and it's very small mortgages, there's no money in it for the lender. So it's generally they're looking at slightly bigger properties, and to be honest with you, most of our clients now these days are buying, most of the investment properties are probably £200,000 plus. Okay, yes, we can do mortgages for those smaller ones, but I'm just saying on general. So the key things is, what's the value of the property? The other thing is the loan to value. Most lenders will lend maximum at a 75% loan to value. So that means it's at least a 25% deposit that you're having to put down. Some cases that might be higher. Quite a few lenders are actually at around 35% deposit. And generally speaking, when I'm talking to clients about investing in the UK, I always say just prepare yourself and budget for a 35% deposit. If we can get you a higher loan to value, great. but just look at that just to give you an indication. The third key aspect is, what is the rent? Although you might put down a 25% deposit, it doesn't necessarily mean that's what you qualify. The lenders do something called stress testing, where they take what the rental amount is, and that determines actually how much you can borrow. So especially, I'm based in London, and in London, what you generally find is that the rental yields are quite low. So in a lot of cases, yes, you might be buying something, but the rental income is quite low, which means you have to put an even greater deposit down. So these are the factors that actually factor how much you can borrow. Getting a mortgage, there's different other things that we have to look at. So one is where are you based? And what nationality do you have? So there are a lot of expats out there, which is great. There's a lot more lenders if you are an expat. If you are truly that you are a complete foreigner, have no British passport whatsoever, there are limited lenders that can lend to you. However, we can still do that. So they look at certain other things. So where are you based? Okay. So a lot of people, if you're based in South Africa, that's fine. But they also look at where the source of funds are coming from. So that's the very key thing, is the deposit, is having a very clear understanding on your deposit. A lot of lenders, when they're lending to people that are outside of the UK, outside of the EU, they look at the source of deposit, and they don't like things like huge cash deposits on there. I know, Melissa, I was telling you the other day about a client of mine that was based in Ghana, and the lender was like, as long as there's just no cash deposits on there, it would be fine. Okay, so it's around the anti-money laundering laws that they look at. So it's very key to see what the clear source of funds are like. Another thing that can factor in on the lender is income. A lot of the international lenders want you to have a minimum income, and that's generally around the £50,000 mark, okay, with quite a few lenders. Now, the reality is, if your income's below that, they might question, well, how can you afford to invest in the UK if your income is below that? It's not to say it can't be done, it's just what the average of lenders are like. So there are various factors that can determine, can you get that mortgage or not? And we always say to clients, and we deal with a lot of clients, international clients, that come to us, and we get referred a lot of clients where they might not be buying now, they might only be buying in a year's time. But because they might be self-employed and they're not drawing enough income out, we just build up the picture correctly over that next 12 months to be in that position so they can qualify for the mortgage. But there's some lenders that don't mind income, that you don't have an income, as long as you've got a sizable amount of savings that you can draw down just to cover rental voids. So there's a lot of complexities to it, but we say, let us handle those complexities for you. You as the buyer, we take care of it, and that's what we do as a specialist mortgage advisor. We hold your hands a lot. We take care of the heavy lifting, and we try and make your life as easy as possible buying the property.
And Gareth, is it easier to get a mortgage on a new build, or does it not really matter?
It doesn't really matter as much. There's just certain differences between a new build and a pre-loved property. Okay, that is a lot of new builds right now. We're just experiencing right at this moment a little bit of down valuations on some new builds. And I think that's down to the fact that a lot of people bought properties in 2020, 2021, where the market was absolutely crazy. We had a base rate here in the UK at 0.1%, and you could put any price tag on something and people were buying it. And what we're finding is that that property might be worth that amount, but because the lenders don't have any comparable data to go off, they're not necessarily getting quite that valuation. But what we've seen is over the past 18 months, the developers are actually pricing accordingly. They're pricing to the market. But generally speaking, on a new build, some lenders might just require a slightly higher deposit, a 35% deposit. And that's just to factor into the fact that if you default quite quickly, there still might be other new properties available. If someone's going to buy a property in a development and you've defaulted, are they going to go for a new property, or are they going to go for a second-hand one? So it's just to factor in some of the risk. But we do a lot of mortgages as we speak. My colleague on the other side of me is currently doing a couple of mortgages for clients on new build developments that we've got going through. So and those for international clients, and in those cases, yes, they were a 35% deposit, and that was just based on the fact that they were quite expensive buy to let and with the rental income. But it doesn't make too much of a difference. I just always say to people that if you are buying a new build or you're buying any property, speak to a mortgage advisor as soon as possible to understand what is achievable. Now, you might, a lot of the new builds people buy off plan. We do a lot of it ourselves. We recommend to a lot of our clients, to quite a lot of developers. We've got great relationships with developers over the years. The thing is, you might be buying a property that's only going to be ready in 3 years' time. Now, we'll give you the advice based on today's criteria, but criteria does change over that time. But what we do is we go back to our clients all the time. So even if you've told us that, Gareth, I bought this and it's ready in 3 years' time, we touch base with our clients, a couple of times over that period of time, just to see where they are, just to make sure that they're keeping up their criteria, to make sure that when we come to get a mortgage, they still qualify for that. We don't just leave them in the dark and say, great stuff, we'll see you in 3 years' time, because we understand you might have changes in your occupation, the life changes that have happened, and we just want to make sure that you can still qualify for the mortgage when we come to apply for it.
And Gareth, you mentioned the exorbitant rates a few years ago. Some of our clients actually bought property cash because of these rates. Would you be able to help them in releasing some equity now?
Yes, definitely. We actually seen a lot of this. I deal a lot with Hong Kong buyers that over the last few years just bought cash. And now the rates have come down. Also, it has helped because they've got experience now. They are what is classed as an experienced landlord in the UK. They've got 12 months, 24 months experience, which means we've got some more lenders to go to, and we can get more favorable rates. So we're doing a lot of that right now, where we are refinancing, taking it out, and allowing clients to actually grow their wealth. Because for a lot of the clients we deal with, it's about wealth creation, it's about growing portfolios, and they want to grow their portfolios and have multiple properties. And obviously, if they've just got cash tied up in the one property, they're not able to expand that portfolio. So a lot of them are actually releasing equity to buy further, and then we refinance them, and then when they bought that property, we obviously take finance on the next one. So we're able to expand the portfolio. And I think there are a lot of things happening in the UK right now. I'm not going to lie, but I think every country's got issues going on right now. But a lot of people say to us, is it a good time to buy? Is it not a good time to buy? When you're investing in property, it's got to be a long-term investment. And some people say, oh, they're not sure where the Labour government's going right now. But I say, if you're investing for the long term, well, we don't know what that future is going to be in 15, 20, 25 years' time. My own personal portfolio, I never plan to sell. I plan to have that go to my kids, eventually my grandkids, and we continuing to buy. And a lot of our clients have that same mentality where they're trying to grow generational wealth. So, the fact is, oh, well, is it a good time to sell the property or not? They're not. They will refinance multiple times over the next decades, pull out equity to acquire more and more property to create that generational wealth. So it's just, the old saying, there's never a good time. It's just, is it the right time for you? So based on your circumstances, is it the right time for you to pull out equity? Is it the right time to buy? And I'd say that's where the conversations come, speaking with mortgage advisor to see what is available to you. Can you pull out equity? Does it work? How much can you pull out? And what is it that you're looking for next? Because if you're pulling out that money, you want to make sure you can do something with that money.
Sure. And there's obviously quite a few fees involved in registering a mortgage. Are you able to add those fees to your mortgage to free up some of your own cash?
Yes and no. Okay, so there's certain fees that are quite standard, and I'll explain that through to you. So what I'll just start with mention first, there's two ways to kind of buy a property in the UK, either through your personal name or through a limited company name. Now, this is something Melissa, you and your team will often speak to clients about to steer them what's going to be the best based on their tax advice. Okay, there's a few extra costs on the limited company side versus on the personal side, but there's a lot of tax reasons why most people buy on the limited company side. Okay, so I can't give tax advice. That's something that Sale does. Okay, but the general fees are with lenders is that there is some lenders might charge a processing fee of a few £100, okay, which is something you have to pay for. They will charge a valuation fee, which you need to pay for. Conveyancing fees, which is what you need to pay for. But most lenders will then charge a product fee. And what that is that can get added on. So that's their cost of actually placing it. And that can vary. Sometimes it can be a fixed amount. Sometimes it can be a percentage. And it can be anywhere up to 6-7% sometimes, depending on that. Generally speaking, the lower the rate, the higher the product fee. Okay, but generally those rates can get added onto the mortgage. So that product fee that you're paying can get capitalized and added on. Some people will pay it up front, but a lot added onto the mortgage because they want to put it down as little as possible and create this maximum monthly return. So those are the key fees that you have. But yes, the product fee you can add on. If you are refinancing, then what we can often do is we can look to borrow a little bit more to cover the costs of those fees.
Okay. And what are the main hurdles as a non-resident?
The main hurdles that we get, okay, is one is where are you based? There are certain countries we really struggle with. And those are countries that you'd struggle with anything in life, okay? But you might be in certain countries in Central Africa or in the Middle East, which there are conflicts going on, they don't like that, okay? Generally speaking, the main hurdles that we get is source of funds. Just make sure if you are looking to buy, make sure you have a clear source of funds. Now, Melissa, there might be quite a few people from South Africa on here. Now, the one complexity of South Africa is a lot of people in South Africa, what we've seen that we deal with, have access mortgages or access bonds, and they pull money in and out of their bond all of their time. They pull money in and out of their credit cards all the time, and their bank statements become very complicated. A lot of the underwriters in the UK don't understand that because we don't have generally access bonds in the UK. So they can't comprehend that your mortgage is 1 month, X amount, considerably less the next month and higher. So if you're looking to buy, try keep it as clean and simple. That's just one of the things as I recommend. If you are looking to go buy within the 6 months, just try keep your, don't do too much crazy things on your bank statements, okay? Try not to pull out money all the time out of your mortgage, out of your credit cards, because we've had in some cases, lenders just actually end up declining because they can't actually understand, they find it too complex, the bank statements. So it can be something as simple as that. A client can have great income, but because around the AML checks and the banks that they can't get any understanding of it that helps them because they just don't know that market. So that's one thing to look at. The next thing is a lot of people buy properties without actually understanding the market and the market rent. And we get to it where clients bought something for £500,000, but the rent's only £1,500 a month. A estate agent's told them that, they only have to put down a 25% deposit. But when it comes to doing the mortgage, they realize that based on that rental income, actually they're going to have to put down a 35 or 40% deposit. So with us especially, I always say to clients, send us through the properties that you're looking at. Let's run some calculations up front. Let's make sure that if this is something that you're going to be offering on, that there's a good chance to get the mortgage. So I say that's the one big issue we find. Clients go into a property thinking that it works. I'm not going to say anything negative about agents, but sometimes agents will say everything to get the deal done, where we don't care what property you buy. If you buy this one or the other, it doesn't bother us. As long as you use us for finance, that's the most important thing. So we'll tell you what's actually achievable on that. And can you actually obtain the mortgage? So I say a lot of clients just don't do their own due diligence correctly first.
Okay.
And listen, those are the big challenges that we face. Is more around, can you get the mortgage based on the rent? And do you have all your documents
Okay.
available correctly. So yeah.
Thanks, Gareth. Yeah, I think that's hugely helpful. And then once you've got your mortgage, and you decide to do, are you allowed to do an overpayment in the UK? Or are there penalties for paying your mortgage off early?
So once again, it all depends on which lender that you go for. Okay. A
Okay.
lot of lenders do allow you to do monthly overpayments, and they'll generally cap that at around 10% of your mortgage balance per each year that you can overpay your mortgage. Now, in the UK, what most clients do is we fix your rate for a certain period of time. What that means is that gives you certainty over what your rate will be for the next 2 years, for the next 5 years, whatever we decide. Now, if you overpay your mortgage or redeem your mortgage within that period of time, there will be something called an early repayment charge that you'll be charged.
Okay.
And that fluctuates. Every lender is slightly different. Some lenders will have a decreasing, so it's a high in the first year, low in the second, third, and so forth. So it really depends on the lenders. Some lenders don't allow you to do any overpayments. So as I said, it's not a one size fits all over here. There are a
Okay.
multitude of different things. So every lender that we deal with might have slightly different criteria to the next. Their product features might be slightly different to the next. But yes, on a lot of cases, yes, you can do overpayments.
And then when you're applying for the mortgage on behalf of your clients, do you apply to multiple lenders and get the best offer, or do you apply to a lender that would most suit that client?
Generally speaking, we apply to a lender that most suits that client. Now, we've got access to the whole of market. We are in the UK. There's different ways you can be set up as a mortgage advisor. You can be under a network, which is generally a limited number of lenders you can go to, or ourselves, our business, Interlife, we directly authorized with the Financial Conduct Authority, which means we can go to whoever we want as long as that lender wants to do business with us. Okay. Now, especially for a lot of our international clients, we know which lenders can lend to you. We have some sourcing tools that we use as well, which give us a list of all the lenders. But generally speaking, if you're a foreign person buyer buying in the UK and not living here, those lenders don't appear on there. Okay, it's us knowing which lenders to go to. Now, we'll generally always look for the lender that gives you the best rate. Okay, but it doesn't always work on that, because the lender with the best rate might not like you because your income's not enough. They might not like it because you're self-employed, not employed. Or it might be they don't like that property, or the rent is too low. So there are numerous factors, but yes, our compliance dictates we have to give you the lender that has the best rate available for you. So we'll look at it, but we don't generally apply to a lot of lenders and wait for them to come back, just purely for the fact there's a cost involved in applying to the lenders. So if you're paying fees to those lenders, every lender is going to ask you for a valuation fee. It doesn't quite work. So like I said, we do all our due diligence beforehand, and we'll say to you, based on your criteria, we are recommending this lender because of X, Y, Z, and we'll apply through to them. Because here we have fixed rates. It's not like in South Africa. We deal with a lot of South Africans, so we know this, that they'll go to a multitude of lenders because the lender will come back and say, well, we'll give you prime plus whatever, prime less. It doesn't work like that here. It's more of here's the rates. And generally speaking, even the private banks some of them that we go to, unless you're doing a very, very big mortgage, and I'm talking in the millions of pounds, the rate is what we talk to you about, is kind of what you get.
Okay, so you really take the admin out of the whole process. And I think once a client's decided on the property that they're going to buy, they get quite impatient. So how long does this mortgage process normally take?
Well, I'll give you some advice. So in the UK, it takes on average from the time you've put an offer in until you complete on the property, it takes on average 5 months. Okay, that's the average buying time in the UK, and I can testify for it. Last year, I bought my new main residence. It took 5 months and 10 days. It's not to say that's how long the mortgage took. It's just because of the legals. We had to wait for, our buyers to move in. We had to wait for the people we're buying from to move out. But generally speaking, because we're doing specialist lending, it takes about 6 weeks to get a mortgage offer on average. Okay, so that means if you get an offer accepted today, we submit the mortgage today. It's around about 6 weeks with the specialist lenders. Sometimes can be quicker, but I'm just saying on average, it's around 6 weeks with the specialist lenders that we deal with. And then that offer, depending on the lender, could be valid for either 3 months, it could be valid up to 6 months. Some even have a longer validity that we have. But yeah, ideally, most investors are trying to buy something and want to get into it as quickly as possible because they have put aside the funds to buy that and they want to utilize those funds as quickly as possible to generate that return.
Yeah.
But it's also,
And
we're reliant on the legal process as well, and the legal
okay,
process can take a little bit of time.
fair enough. And is there the option to review your mortgage every few years or every year and try and get the best rate? Are you able, is there any flexibility involved
So
or available?
as I mentioned to you, a lot of clients will go for a fixed rate mortgage. Now, if you're fixing for 5 years or 2 years, whatever it might be, we'll always come back to our clients and go through it. Now, generally speaking, 6 months before your mortgage expires, we'll come back to you and talk to you about what next, okay? In certain circumstances, you know, and we saw a lot of this over the last couple of years where the rates went really high. And this year we came and remortgaged clients and they paid some of their early repayment charges to get out of that mortgage to get a new mortgage, all right? So we'll always review that for you. But because there are costs involved, as I said to you, there's an early repayment charge if you fix for a certain, it might not be financially viable, okay, for you. But we do a lot of mortgages because, as I say, your fixed rate comes to end. Unlike in some countries where you go get a mortgage once with that lender, you'll stay with that lender for 20, 25 years. You'll have multiple conversations with us over the lifetime of that mortgage. So we'll come back to you every few years and talk to you, find out what's the plan? What are you doing next? And a lot of our investor clients, they'll come back. Hopefully the price has gone, of the property has gone up. We'll come and refinance, take money out so we can help buy the next property. So like I said, we have multiple conversations with clients over the years. It's not just yeah, great, here's your mortgage and you never speak to us again. You'll be speaking to us over and over again. And most of our clients on the buy-to-let side have multiple properties and are growing and adding a couple properties a year. So we are always in conversations with our clients.
Awesome. And I'm sure you've had this question a lot over the past month, but there's been a bit of uncertainty around the budget speech, which is happening at the end of the month. What do you anticipate happening with property prices in the UK?
Well, it's a hard one. You know, the government has said quite a few things. I do think there's going to be a little bit of a crackdown on landlords. There are some changes happening. Some of it's good, some of it's a little bit more tricky, but I think the bad things that are out there is more against landlords. We've got a lot of dodgy landlords in the UK. I'm an active investor myself, and I've bought some properties where I couldn't believe that people actually were paying rent on these properties. They were just absolutely terrible. And I think it's designed to get rid of that. Now, most of my clients aren't those types of landlords. They wouldn't live in those types of properties themselves. And I know as a landlord, I want to give my tenants a good property, because ultimately, if I've got a good property, I'm generally getting a better quality of tenants in there that will stay longer and respect the property. So I think some of the things are actually really good that they're looking to impose, getting rid of the no-fault evictions in this. I think it's good. I want long-term tenants at the end of the day. I want someone who's going to stay in the property, and I think most people do. I think if you're buying with the right agent, you're buying in the right areas, you can mitigate quite a lot of those issues that you're looking at. Look, we've still got a lot of clients buying. As I said, we've done a couple of mortgages already today. I deal predominantly with a lot of international investors buying in the UK. And as I said to you earlier, they're buying for the long term. Labour government might be gone in 5 years' time. Probably will be the way they're going on right now. And another government will come in. If you're buying for the long term, you've got to prepare that there will be ups and downs along the way. But, you know, UK property prices, the issue that we have here is after Brexit, the cost to build has just gone up massively. Labour is expensive. A lot of the remortgages we do for clients, the value of the property or when we actually even doing a purchase of a client of a property, we get two valuation figures. We get one of what the property is worth and what the reinstatement cost for insurance purposes. And a lot of the times right now, the reinstatement cost is higher than actually what the property is worth. so when I look at these valuations and I think, well, the house burnt down, it will cost me more to rebuild the house than it's actually worth. So when I look at that, I think, well, how can prices fall? That's the thing is we Labour have been in power for just over 100 days right now. They promised to build, I think it's 1.5 million houses a year. They haven't gone any close to what their monthly target is right now. It's never going to happen. We live on an island where planning laws are so restrictive. Every time they want to build in a new area, you get someone out that will come and veto it, and it just doesn't happen. People want to own, and a lot of big institutional investors are coming into the market in a build to rent. So big insurers, shopping, Waitrose, John Lewis Partnership, they want to build. Morrison's another big shop. They want to build multiple dwellings. Asda, which is another big retail store, they want to start getting into the game because people need a place to live, and it provides a good long-term steady income. So I just can't see how prices can drop just because the cost to rebuild them is more expensive. And I've got numerous properties around that £100,000 mark that I've bought, and to rebuild that, it's 200 grand, but the value would only be 100. So they can't build low cost houses anymore because it costs too much to build a low cost house. So I think the market is still in safe hands. Lots of international investors still want to invest in the UK because it's a steady economy. It's generally safe. As long as Labour don't do anything stupid in the budget, which I'm sure they're not going to do anything too stupid, hopefully, I think it's still going to be perfectly fine. And there's still demand out there. If you have a look at how quickly rental properties go, and I would say if you're investing in a property, go have a look at the likes of Rightmove and Zoopla. If you're looking at a certain area, type in the rentals and see how, and do yourself a favor, log on every day for 2-3 weeks and see how quickly those properties get taken in that area, because that can tell you what the demand is like.
Interesting. Thanks, Gareth. I think the main takeaway from today is that if you're even thinking of buying property, is to start chatting to someone like yourself. You can never be too early. So and then you can start planning and make your transactions simple and get do all the homework. So I think if anyone else has got any questions, I don't have any more. If you'd like to pop them in the chat, then Gareth can go through them and answer your questions.
Yeah, is anything coming through at all?
Not just yet on my side.
No, it's but I think you mentioned you're also going to share my contact details with people. Is that correct?
Yes. Yeah. So I'll send the recording and Gareth's contact details. We got one comment to say very clear, thank you. So I'll circulate the recording of this webinar as well as Gareth's contact details, and you can get in touch with him if you'd like to have a chat. And yeah, and then obviously Sale is there for any tax advice or planning.
Perfect. Great stuff.
Oh, there we go. There's one more. Can you give an example of rates for South Africans for 100 to 150k property?
Okay, a very hard question to answer. Okay, purely for the fact is it all depends. Are you based in the UK or are you in South Africa? Do you have a footprint already in the UK? Or is this your first buy to let? We also need to know what the rents are. But give you an idea, we did something for a client, a South African based in Mauritius the other day. He had properties already in the UK, and we've just refinanced him, and his rate was just over 5.5%, which wasn't bad considering the base rate is 5% right now. So it is very hard to answer that question because there are so many different factors. What type of property is it that you're buying? What's your experience of it? What is your income like as well? But yeah, so it's very, very tricky to say. I'd say if you want to ping me an email, I know Melissa's going to send it out, but my email address is gareth@interlife.co.uk. If you want to ping me an email now, I'd happily, ask you a couple of questions on that, and I can give you an idea of what it is. Because, as I say, it's not a one size fits all, so it's very hard to answer on that. But yeah, it could be 5.5%, it could be 7.5%, could be 8%, just depending on what it is and everything surrounding you. But as I said, if you had have asked that question a year and a half ago, some of the mortgages that we were doing were in the 9% for people, because there was just such limited availability to lenders. But yeah, it could be as low as 5.5%.
And then another question, just to clarify, an access bond is an impossibility in the UK.
There is one lender that has something slightly similar, but it's not quite an access bond. It's more the fact that you can put money into a bank account and you can use that to offset some of the interest. But we don't have a traditional access type mortgage where you are funded for a, £200,000. If you pay and you can start pulling that money out as and when you please. We don't really have that here.
Thanks,
On a traditional buy-to-let, yeah.
That seems to be all for now. So I'll circulate the presentation and provide you all with Gareth's contact details.
Amazing.
Thank you, everybody, for joining. Thank you, Gareth.
All right, Melissa, thanks for having me.
Thanks. Bye.